Market structure, yeah. When we talk about market structure, we talk about highs and lows, in fact. And you all know that the market has highs and lows, and it moves that way, to make it very simple. And we're not even at the moment talking about higher highs and higher lows. We just say, this is a high, this is a low, another high, another low, another high, another low, and so on. So this is the picture you usually get to see in trainings. And this is a, let's say, up-to-date picture from, I think it's the dollar. I just use it from the dollar this weekend. And you can see there's quite some similarities. Of course, this is always easy to teach, but it usually never looks that way. It's simple to explain, but people usually are very disappointed when they afterwards come to this one and see, well, it somehow looks like what we drew in together, what we talked about, but it's much harder to understand. And I can fully understand this topic. If you're new to this topic, it's not as easy as everybody wants to claim, say it that way. But this will become better with chart time, as Anne calls it. The more chart time you have, the easier it will get. And now we not only have highs and lows, we have special kinds of highs and lows. I wrote them down here. You have higher highs, you have higher lows, you have lower highs, and you have lower lows. In this case, you have, let's say you have a high here. If it's a higher high or not, we cannot say, because we don't see the history on the left side. But we start here and suppose it's a higher high, it's a high for sure. And then you have a higher low. So this is a high, this is a low. And then the high is broken, hence you got a higher high. This high is higher than the previous high, hence it is a higher high. Then you get a new low, which is a higher low, because this low is higher than the previous low, so it's a higher low. And then you get a new higher high, because this high broke the previous high, or let's say it's just higher than the previous high. And then all of a sudden you get a lower low. Where does this come from? Because this low is lower than the previous low, and that's why it's called a lower low. And because this high, which is a new high, was not able to close higher than the previous high, it's a lower high. And then you get another lower low and a lower high. And what this means, I'm not saying it now because we will have additional slides, but I think you can already see from the color, you have a kind of, blue color for an uptrend, a red color for a downtrend. And yeah, this should indicate a little bit where we want to go. Now when it comes to market structure, we also talk about the boss. We have this in several sessions. What is a boss? And there is different kinds of bosses I will talk about, and I really try not to confuse you with the bosses. But of course, you have to have a main idea what it means, and it depends a little bit where you come from. Most of the traders I know, they call it a boss. But if you come from a similar kind of trading, then you might call it a BMS. And the boss is just short for break of structure, and the BMS is short for, oops, so sorry, Anne, I just clicked ask to unmute because I wanted to admit some people, but you did already, thank you. Where was I? Yeah, and the BMS is short for break of market structure, and both mean the same. It's just two different kinds of phrase it. And you can see here you have a high. In order to get the new higher high, the high has to close above, and at the same time you have a break of structure. And this, when I talk about the boss, I mean a break of swing structure, because this for me is a swing, and then you have a break of structure. And of course, this is now a let's say, yeah, a very rough drawing. There's a lot of more things about it, and we will also talk about it. What more can we say about market structure? So, you know, we have highs, we have lows, we have higher highs, we have higher lows, and so on. And in SMC style, you would also have weak highs, weak lows, strong highs, and strong lows. And I actually like this concept because it gives you an idea where the price wants to go. Let's say you have a high here. At the moment, we don't know if it's a weak or strong high, but once this high is broken by a break of structure, you can consider that this was a weak high or is a weak high. And by considering that this is a weak high, because it was so weak that it could easily be broken, you suddenly get a strong low, which means this low can be somehow seen as protected. You know, it does not at all mean that the price cannot go below this low. That's not what it means. It just means the probability that this low is broken is lower due to the fact that it has broken the high now. So when you look for trades in this, yeah, if you want to frame it already, if you look for trades, you would actually rather look for trading bullish than bearish, because you have a strong low, which might be protected. And this continues the way up, in fact. So you have a weak high because it was broken again. You have a strong low. Then you have, suddenly you got a strong high. And the strong low you had before, which we considered protected. Why? Because it broke this high, was broken. And if you have a situation where you have a strong low, which was broken and suddenly becomes a weak low, then you can see or expect a change of market structure or a shift of market structure. Because you're not bullish anymore once this is broken from that point of view, and suddenly you start to get weak lows. And why? Because the lows now start to be broken. You get strong highs suddenly, because the lows are not able to break the highs, but the highs are able to break the lows. And it's always a kind of battle between the highs and lows. Who is winning against who? And in the uptrend, the low is winning against the highs because it always breaks them until a low is broken and the highs become strong. And then the highs start to win against the lows. So that's how you can see it if you want to. All right, so I think that's everything for this one. What do we have here? Yeah, that's actually the same thing as I already said. I just wanted to point out here again that you also might call the strong lows or high protected. Because of course, if you break a high, there is not let's say the interest of breaking the low is not very high. You want to move the price higher, and at some point you have to protect your orders, or the market makers are protecting the orders, and they just move the price higher. And if they break the low, the protected one, that's an indication for you that the price might change now. Not the price might change, I'm sorry, the market structure might change now. So we have also different swing structures, as you might have seen. And one thing you for sure have realized is that the price and the structure are fractal on different time frames, of course. That's what it means. And yeah, one thing you heard, of course, or for sure, is that the trend is your friend. And one thing which was quite new for me, but it's true, is until it ends, of course, because the trend ends at some point, and then a new trend starts, which is your new friend, until this one ends, which you can see here. Like, you have a uptrend, which is your friend, until it ends and becomes a downtrend, and then the downtrend is your friend. And another saying, of course, is the structure is bullish until it's bearish. And I'm saying this quite often, and it's all, of course, also vice versa. I'm saying this quite often because if you have a bullish structure, you would probably not, unless you are a very experienced trader, you would not be looking for bearish trades. You would rather go for bullish trades. And sometimes it's actually quite obvious that the structure is still bullish, or most of the times, let's say it that way. And for me, I would not look for bearish trades, even if there is a high probability point of interest, order block, and so on. I would not, because for me, key is market structure, and I want to go with the trend until it ends, and then I go in the other direction. But that's, of course, completely up to you. What you can see here is you have the, let's say, the swing structure, and I don't want to confuse you with this. So if you don't want to forget it again, I just use this for my personal explanations, also sometimes to other people, to make it clear what's the main difference is. For me, the black line is the break of swing structure, and it's called the boss, the break of structure, because that's what it means to me, a break of swing structure. And then you have the internal structure, and this could be 4 hours and 15 minutes. And the internal structure, of course, you have, as we said, structure and price is fractal. You have also an own structure within the swing structure. And then there you also have a boss. So if you call this a boss and this a boss, it might get confusing. Of course, you can call this a 15M boss, a 4-hour boss, which makes it more obvious to you. But however you call it, you need to understand that this is a break of internal structure, and this is a break of swing structure, because this, for me, again, is a swing. And if the whole swing is broken, then you have a break of a swing structure. And if the internal structure is broken, then it's a break of internal structure. And again, you can call it boss, or you can call it whatever you want. I just use this to make it a little bit more obvious to you. And then we have a chart example. I think it's again the dollar from this week. Yeah, just wanted to use this one to show you again, to map out, like, you know, this is the 4-hour structure. And something I probably forgot to mention is that a low, for example, like this one, is only confirmed once you break the previous point, the previous swing point. So until, let's say it that way, until this high is not broken by this one, this low is not confirmed. The price could go much lower if it wants to, and then break the high, only then it will be a confirmed low in this case. So when and if it doesn't break the high, but it goes lower and doesn't break the high, it's internal structure until it breaks the previous low, and then you have a structure shift again. So everything, if you consider this as a swing structure, everything which happens within this structure here, this would be internal structure. But once the low is broken, you would confirm a new high, or if the high is broken, you would confirm a new low, like this one, as you can see here. And only then. So we have this 4-hour structure for the chart example, and then you have the internal structure, which looks a lot more messy, of course, and this is where most people struggle, and it's fully understandable. But you should really also focus on the main swing structure, because it's much easier in the beginning. Not concentrate on the 15-minute structure. You can see a lot of break of structures, a lot of break of internal structures here, but also breaking to the upside, breaking to the downside, and so on. And if we talk about break of structure, there is different considerations for different traders. Let's say, for example, a wick break versus a body break, and so on. And it really depends on your style of trading and how you learned your own way of seeing charts and reading charts, how you want to trade it. I think we will talk about that a little bit in a more detail later on.